Hey everybody, Kyle Knott back here with another video. Wanted to talk a little bit about today was what if your money could work harder than you do? So we go to work all day long, 40 to 80 hours a week, busting our ass, sweating, getting dirty, whatever it is that you do, but you work hard, you trade your time for the money. Okay, what do you do with your money? Your money all goes into the bank and usually into a checking account, and from there you pay out your bills, a lot of which are debts to a bank, and paying those debts out of your checking account, just doing what we've always been doing, trading time for money, and at the end of the month we're broke usually, right? We're paycheck to paycheck. There's maybe a little bit left over. We're not sure where it goes, but kind of what I've been talking about is a way to stop all that, and it's called velocity banking. You can basically, instead of using your money to go into a checking account, which the bank then loans back out to other people, and they make money on your money while you're out sweating your butt off and working hard all day. They're sitting in an office loaning your money out and making a spread on your money while they don't pay you any interest really on your interest or on your checking account. They're loaning that out and making interest on your money that you earned. So let's take that money back. Let's use a line of credit of some sort. If you own your own home, if you've owned your own home for more than 4 years since before COVID or during COVID, you've likely got some equity in your house. So you can get a home equity line of credit, and we can use that then to kind of essentially go into debt. And we're not keeping any money in the bank, in a checking account. We're going to have this home equity line of credit that we're going to use to pay all of our bills from. Okay, so your money now will be going into this line of credit. You pay all your bills from the line of credit, and in doing that, we'll take your line of credit down super fast, especially if you've got any debt. Credit card debt is the main killer. If we're paying 20+% on credit card debt, you're never going to get that stuff paid off. So what I really want to help people out with is, if you've got 20% credit card debt and you're not completely paying that credit card off every month, then we got to get rid of that. So let's use this velocity banking technique. I've got a bunch of other videos on here. I'm going to continue making them, showing the exact numbers, but in most cases, within a year, everyone's obviously different, a year or two, people have gotten out of over $50,000 of debt, of credit card debt. I've showed, paying off trucks, and it's just a good way to go about paying things off and getting out of debt. Then we can use that, what we were paying towards the debt, and it's all going to interest. All it is going to the banks, and they're loaning it out and keep making a spread. That's why all the banks are big, beautiful buildings, because they're using our money that we work hard for, and they're loaning it out to other people, and they're making a ton of cash on it. So let's reverse it. I'm going to show you how to be your own bank, and once we get out of debt, we can start going into taking that extra cash flow that you've got every month, and you can, in a couple years, you can be your own bank. It's kind of it's a hard concept to understand, but once you do it and get into it for a couple years, it's super simple. It makes so much sense. It's kind of a separate account where, what if you could have like a savings account, and when you go out to buy a car, and you're always putting money away to buy a car, and at the end of, say, 5 years, say you've got 50 grand in your savings account. Well, if it's 50 grand in your savings account at the bank will pay you, I guess I've heard of banks paying 5% now, which has been unheard of, but usually it's, 0.0 nothing in your savings account. But once you take that money out of your savings account, now you earn nothing. So say you were earning 5% and you built this up to $50,000, and you go to take this $50,000 out of the account, then you make how much interest? Zero, because it's all gone now. Or say you take $45,000 out of this 5% savings, and now you've got $5,000 left, and now you're making 5% on $5,000. Well, there's a different way, and it's I hate to say the word because people kind of shy away from it, but it's a whole life insurance policy. And we're not looking at the death benefit. We're not using this for life insurance. We are using this for a bank. We don't even care about the death benefit. If you die, yes, there is more money, that your family, your beneficiaries could get, but that is not why we're doing this. We are doing this to use while we are alive, and we're using this basically as a place to store cash. So take the same scenario, instead of putting this money into a savings account over 5 years, say you've got $50,000 of cash value in your life insurance policy. So you now have access to $50,000, which you'll then take a loan against your life insurance policy. That money stays in the policy. It's kind of like your house. If you've got a house and you get a home equity line of credit, you don't actually take the money out of your house. It's just your house is worth more than you owe on it, so they are letting you borrow against your house. Same thing with the life insurance policy. They're letting you take a loan against the cash value. And so what you do is then you take a loan out for $50,000 for a new truck, whatever it is that you're buying, and then instead whatever you would do, whatever the dealership would offer you, say you get a $50,000 loan and they give you, your payments are going to be, I don't know, $750 a month. So instead of taking that $750 and paying it to the bank, what you do now is you pay it back to your bank. So same thing that you've always done. Instead of giving all your money over to the bank, you're going to pay your own bank back. So take the $750 payment and put it back in and pay off your loan from your life insurance policy. And then it's just the same thing as a bank always is. And what's going on here? Sorry. So it's the same thing as the bank. Pay that off, and then you can do the next thing. This is a way that you can basically get all your money back. Instead of paying all the interest to the bank, you pay it to yourself. Over time, your cash value grows and grows and grows. There are projections where everyone's a little bit different, but you can get into the multi-millions. This is actually what the richest of the rich have been doing. This is more secure than banks. It's just a great way to have your money work for you. I'll be putting on some more videos like this. Just kind of want to plant that seed. Once we get through the velocity banking side of it, get some of that debt knocked out, and then this is the next way to build the wealth after that. So I want to plant that seed. Please stay tuned for some more videos. Would appreciate any comments of what you guys are looking for. Do you have any questions on things? I know as I talk to people, certain questions that come up, I try to make videos on that and I try to get that out to everyone. So just trying to help, and please let me know how I can be of more help. Have a good day, everybody. Thank you.